Good morning, traders. Definitely a softer start playing through in the Asian Open today. Yeah, the leads we got from Wall Street definitely on the sort of lackluster side. The bears have wrestled back at control. Yeah, everyone focused on the energy market, airlines to a lesser extent, but definitely the energy market's getting all the attention. That May contract move has taken a lot of people aback. Yeah, people are not used to necessarily seeing oil futures prices going negative. I think given the dynamics that have been taking place, yeah, it probably won't necessarily surprise. And when the CME came out, they noticed that we were going to see negative prices. It sort of made everyone stand back a little bit.
Okay, let's go to the board, see what we're seeing. S&P closing down 1.8%. Volumes on the light side, 30% below the 30-day average. 1.5 million S&P contracts traded hands. It's pretty light. I'd like to see more sort of above 2 million to call it a heavy volume day. Nasdaq and Russell outperforming, especially when you can put it to consideration that the Dow was down 2.4%. Leading today, we've got SPY futures down 1%, Nikkei futures down 1.4%. And have a look at this S&P chart here. This is where we were sort of finished off yesterday around 4 o'clock Eastern Standard Time, sort of close of the ASX and the Nikkei. Had this sort of whippy ride, but ultimately closing about 1.7% lower from where we closed yesterday in the cash markets here in Asia. So that needs to be factored in. You've also got that WTI contract, pretty weak there. I've looked at the June contract because no one's trading May. Obviously, everyone's been focused on what's happening in the June. That's where all the open interest is. And actually have a look at that settlement there, 21.22 down 15%. So that's not exactly looking particularly healthy in itself. I know everyone was talking about what was happening in May. The settlement actually around $37, but that's been one that's been focused on very heavily. Have a look at the impact that's had on inflation expectations. You can see break-evens down 12 basis points on 5-year break-evens. So that's obviously boosted real yields. You've seen volatility kicking up there as a result. You've seen the VIX at 43%, up 5 vols on the session. That's something that definitely be interesting there for vol traders. But you've also seen risk effects coming under a bit of pressure as well, what's based on that oil price. You can see the Aussie down about 0.5% or so. But the big damage has been done in the CAD, the NOK, as you'd imagine, in the petro currencies there. And some of the sort of real high beta EM plays, the MEX and the Brazilian real down about 1.5%. So it's an interesting setup. We're certainly looking at a softer start in Asia. Trade it here with Pepperstone.